All right, welcome to Money Club Mondays. Today's October 11th, 2021. And on the schedule today, different types of real estate, some different opportunities that are coming up, and some different offerings that are in the Private Money Club right now that are pretty hot and ready to roll. So if anybody's in the Private Money Club, please chat in your comments or type in the Q&A box. I'll make sure to answer those for you. If you're not in the Private Money Club yet, you can go to privatemoneyclub.com and check out what we have going on there. Also, moneyschooltraining.com/private-money-club is another source to kind of learn a little bit more. Or you can email me Snaggy, S-Nagy, S-N-A-G-Y at chrisnaugle.com, and I can tell you more about it. So the Private Money Club is just an area for lenders and borrowers to meet and for private lending and passive money opportunities to be presented. So let's go ahead and dig into this. So there's a lot of reasons why I love real estate. So out of college, I was a personal financial advisor with Ameriprise Financial, learned a lot about stocks and bonds and financial planning strategies and incorporating it all, using things like IRAs, retirement accounts, 401ks, and different strategies to allow people to retire the way and the lifestyle that they want to, right? So one of the things that I found as a financial advisor was the large majority of people that I was meeting with, there was no way that they were going to be able to meet their goals for retirement without drastically changing a lot of what they were already doing, meaning cutting back drastically on how they were spending and living now to be able to achieve that retirement goal, or continuing on the path they're going and having to push back retirement many years. And this was back in 05, 06, 07. I started learning about, I actually went to a real estate seminar. I got invited to a real estate seminar, a free preview. And I went there and I started listening to this speaker at the front of the room talking about real estate investing and how normal people can go out there and take advantage of real estate. And ever since I went to that first seminar, I've just always been drawn towards real estate and all things about it. And one thing that I really liked was when you talk about stocks and investing in the stock market and traditionally speaking, putting your money in companies. Listen, I'm a huge believer in America and the United States, and I'll bet on America all day long. We'll figure our way through it, all the ups and downs and things like that. And most people out there are good people, right? But you can't control, like me as an individual, I can't control what Amazon is doing, or I can't control what these large corporations, Facebook, even like Ford, Tesla, General Motors, General Electric, like all these big companies, you can't control what they're doing. And then every now and then you have a bad apple that comes through, something like Enron, where it's just all fraud and scams. But the bottom line is I don't have a lot of control over the day-to-day operations and what happens. And so one of the things that I always liked about real estate is I can go and I can look at a house and I could see immediately, okay, I can do this, this, and this to this home to drive the value up. I can study the area that it's in and I can look at trends. Is this an area that's going to continue to increase in value? Or is this an area that, is kind of stagnant? There's not a whole lot going on. There's probably not a whole lot of potential for growth. Or, once I own this property, what can I do with it to make money? And there's so many different, what we call exit strategies when it comes to real estate. So you have options. And to me, anytime you invest or you want to control your money and grow wealth, it should be about options. You should have the control over being able to do what you want to do. And that's one of the things that really drew me to infinite banking and the money multiplier as well. When I learned about it a couple of years ago, is because it's all about control. And those of you that follow us, that's all that Chris, I, and our team talk about, is how to solve your money problem by taking back control of your money. So that's something that I always really liked about real estate, is I can control every aspect of it through negotiation and sales skills. I can go negotiate a property to buy it, what price I want to pay for it, and on what terms I want to buy it on, right? I can do all that. So I have complete control. Do you get all of them that you want? Like, let's say I found a home that's worth $100,000 and I'm only willing to pay 60,000 because it needs some work and I got to allow for holding costs and resale costs and everything that goes into it. So maybe I'm willing to pay 60,000. Am I going to go in and am I going to get every single deal for the price that I want to pay? No, absolutely not. You're going to win some, you're going to lose some, but that's how you play the game, right? You're going to get better and better at negotiating. So my job as the investor is to go in and explain to that person selling, hey, this is why the home's worth 60,000. And a lot of times, even if maybe they're willing to sell at 60, but maybe they can't move out for 6 months, or maybe they want to owner finance the thing and sell it for a little bit higher price at a certain interest rate or something like that. So there's a lot of different options that we have when purchasing a home as well. And then once I own that home, or once I now have control of that home, I can wholesale it, I can wholetail it, I can flip it, I can rent it out, I can owner finance it. I can use the BRRRR strategy of refinancing, using private money to refinancing traditionally, keeping the property or cashing out of it that way. So there's so many different options and things that I can do with a property, not only when buying it, but also in the fix up stage. And then whenever I go to sell it or cash out or profit on it, whether that's through income monthly through rentals, whether that's an Airbnb vacation rental with weekly income coming in, whether that's long-term or whether that's a quick flip sale where I'm just making the big money and moving on to the next one. There's so many different options. And then you get into lease options and different strategies like that. And so it just gives me so much control. And so that always made a lot of sense to me. And then you start studying, okay, what do wealthy people do? What do super successful people do? And almost 100% of super wealthy, successful people own real estate in their portfolios. And then you start studying, okay, well, what types of real estate do these super successful people own? Do these big funds own? Like what kind of real estate? And then you start looking at, all right, so what are those options? And it's everything from literally mobile homes to apartments, to single family residences, to multi-million-dollar waterfront properties, to everything in between, right? To land. You can even buy and sell land, like with no houses on it. So there's just so many different types of real estate, so many different types of strategies. And that's the good news as an investor, right? Especially as an active investor. If you're a smart, active investor, you always know going into a negotiation when you're looking to buy a property, whether it's a mobile home or whether it's a 500 unit apartment complex, you're going in, you're buying that from somebody. So you're going in with the attitude, the more I know and understand and options I have to purchase this, the more chances I'm going to have of buying it in a beneficial way for me. Again, whether I have to offer cash and use hard and private money, whether I can own or finance that thing, whether I can traditionally buy it using the banks, knowing how to do all these different strategies is going to help in that negotiation and get you the deal that you want to get. Because I can't tell you how many times I haven't done active real estate in a few years. I've just had a lot of other things going on. But back in the day when I was doing more active real estate, I can't tell you how many deals that I went into to meet with a homeowner and they had already met with other investors. And those other investors passed on the deal. And I would always ask, like, okay, so you're meeting with me now. Like, what have you already heard? Like, what is it that you liked about their offers? What did you not like about their offers? And they would tell me, and I would listen. A big part about sales is listening. A lot of people don't understand that. They want to talk and tell and tell and talk and tell. A lot of it's listening, sitting back and listening, right? So hear what they say and provide solutions. If you can hear what somebody says and provide solutions in anything in life, you'll create success for yourself. Okay. So you want to listen. So they would tell me, hey, they were offering me all cash, close in 30 days, but I don't need the cash right now. I actually need to stay in the house for the next 3 months and I want to get a little bit more for it. So I'd say, okay, well, what if we arrange the deal where you finance this property? I'll let you stay in it for as long as you need to stay in it. I'll pay you yada, yada interest to do so. And whenever you're ready and let's say in a year from now or 2 years from now or 3 years from now, whatever's good for you, we'll do a balloon payment where I cash you out at that time. When you do need the money, it'll give you time to do what you need to do now. And you're able to move on. And they'd say, oh, that's the perfect solution. Exactly kind of the thing I was looking for. So there's so many different options when you just sit back, you listen, and you know what you're talking about. So Angie was saying, can you throw those websites into the chat? Angie, what websites? Sorry, I was just rambling there. I just want to make sure I'm giving you the right thing. Let me know what websites you're talking about. I definitely will throw them in the chat. So when you're going in, again, so you're going in, you're talking about these deals. And then the other thing to look at is when you're going in and you're talking as an active investor, and I mentioned earlier, the exit strategies. So if you're going into a deal and you have in your mind, well, I only want to buy this property if I'm able to do a quick flip on it, and you don't want to look at any other things. Well, again, what if that person doesn't want to sell it quick for cash with a 30-day close? What if they do want to stay in the property? Or what if there's something else going on with it, right? Or maybe it's just not a deal that can be flipped quickly. Maybe it's a long-term type deal. But if you go in with one mindset, you're going to miss out on so many other opportunities. So if you're an active investor, the biggest advice I can give you is get educated on many different strategies, especially sales and negotiation, but also have all these tools. I call them tools in your tool belt, right? So have these different tools available. So if you run into something, you're able to pivot quickly and offer another solution. Again, just think about how can you serve the entire time you're meeting with somebody? How can I solve this problem, this person's problem? So first you have to understand what their problem is, and then you have to have the education to provide the solutions to solve that problem. Okay. Now, it does take a lot of time, experience, education, mentoring, and coaching to get to the level where you're comfortable going in with those types of sales and negotiating skills and having those kinds of tools and solutions in your tool belt ready to offer to that person on the spot. Okay. So if you're looking at getting into real estate or you're not real experienced, you're kind of learning more and more, get a mentor, get somebody that can walk you through this stuff. Get somebody that's there on the phone, like where you can call when you're on your way to the appointment. Hey, this is the details. What should I talk to them about? Like, what are some things? After the appointment, you can call your mentor, your coach, and say, hey, this is what happened. This is what I said. This is what they said. This is what I told them to do. These are the options I gave them. And let your mentor or coach give you on-demand feedback, like in real time. And through experience is how you're going to learn the most. Okay. So get somebody that's able to do that. All right. If you're getting into active real estate. Now, if you are in the private money club on the lending side, you probably want nothing to do with any of that, right? You don't have the time, or you don't have the passion, or you don't want to actively go out there and do the work that's required to be a real estate investor on the active side. But you understand the value of owning real estate and having it in your portfolio and taking advantage to everything that real estate offers. Okay. So in that case, that's where the private money club really comes in powerfully for you, because it provides all these different solutions where you don't have to be the one actively doing all this stuff, but you're taking advantage of all of it. So before I get into those different types of real estate and what we're looking at, let me just take another step back. So again, why real estate? Other than the fact that we can control it, wealthy people own it, big funds own it, businesses. So we do, just like in infinite banking with the money multiplier, we study the wealthy, we study what the banks do. So look at banks. Great example. All right. Again, why are almost all employees, when you walk into a bank, they're all vice presidents? It's because the bank now has the ability to put an insurance policy on their life. So in companies, banks buy insurance policies on their vice presidents and use the infinite banking concept, just like we do individually, right? It's called BOLI, BOLI, bank owned life insurance. Go look it up. Banks are the largest purchaser of whole life insurance, more than anybody else out there. Banks are. So why not do what the banks do? Same thing with real estate. Think about where banks are located. Well, first off, let me ask you this. When's the last time you were actually in a bank, right? I actually go to the bank once a month or so and kind of do a couple things. But if you think to now, prior to working with Christo, who loves paper checks and stuff, prior to a lot of that though, I hadn't been to the bank in years, right? I would go there to open like a new business account, and even opening new accounts these days, you don't have to. The banks have really adapted to COVID and kind of keeping people out. But if you think back like 20 years ago, you'd probably go to the bank multiple times a week, right? These days, it's a lot more rare. However, are banks closing, or are you seeing more and more banks and bank locations everywhere, right? They're still popping up. I mean, you can drive down any major city, any rural area, any suburb, anywhere in the country, and there's going to be a bank every mile, right? Or more. And a lot of times it's the same bank. Like you'll see a Wells Fargo here, you'll see a Wells Fargo 5 miles down the road, you'll see another Wells Fargo 5 more miles down the road, you'll have another one on this street corner. And then where are these banks? They're not on side roads out there in the back somewhere. They're literally the largest buildings in most cities across the country. They're on every major intersection, on every major road around the country, right? Because these banks understand that real estate is very valuable. And if they're able to buy that real estate, they now own the real estate, they now own an asset for their bank that's going to appreciate. And then the branches, have a place to operate. And then I think with them, it goes into advertising too. You see them everywhere and it's very accessible and it's become a very competitive industry, but they're everywhere, right? So why would we not do the same? And the other example I always use is McDonald's. A lot of people think McDonald's, makes money off of selling cheeseburgers and Happy Meals and ice cream and milkshakes, although not those, because there was just an article we did on the What the F Happened recently about how McDonald's ice cream is always broken, right? But a lot of people think McDonald's makes money. McDonald's makes money off real estate. If you look at where McDonald's are located, again, every single major city in the world, every single major intersection in the world, every road, McDonald's are everywhere. And what McDonald's did that was very smart is McDonald's doesn't just buy their building that they operate in. What they did back in like the 70s and 80s is they were actually buying the entire intersection. So they'd buy the building here, the building here, the building here, and the building, or the land here, and here. And then they would lease it out. So they would have McDonald's here, but then they would lease out that property to Burger King. They lease out that property to Wendy's. So why would McDonald's lease out property that they own to the competition? Because they don't care. Again, they don't make their money off flipping burgers. They're in the business of flipping burgers to make money to buy more real estate. So if people like banks, if people like McDonald's, corporations like McDonald's are buying real estate, you talk to any wealthy multimillionaire, billionaires out there, they all own a lot of real estate in their portfolio. So if they're all doing it, it makes a lot of sense for us to do it too, right? So some of the reasons that I love real estate. And then let's take it another step further, okay? Because here's what a lot of people don't understand is you can make money in real estate no matter what is going on in the economy, no matter what's going on in the markets, no matter what's going on in the world, okay? There's always money to be made in real estate. And to do so, you really just need to follow the same basic concepts that you always hear us talk about: buy low, sell high, and don't lose money. And the nice thing about real estate is if you hold it long enough, it will go up in value. You can look at real estate charts over time. There's going to be fluctuations just like the stock market, but over time, they're always going to increase and they're always going to go up. Now, here's one of the differences. You buy a stock up here right now in this market we're in, we're going to have a drop. Okay, fine. Maybe you don't care. Maybe you have 20 years till retirement. So you're going to wait for that to go back up. So eventually you'll make more money. Okay. I'm fine with that argument. But while it's on its downside, what is it doing for you? Now, let me give you an example with real estate. If I buy a home right now that I can rent out for $2,000 a month, and it's, maybe I'm paying $1,500 in a mortgage on that property, so I'm making $500. So even if I buy $200,000 and the market comes down, maybe that house falls to $150,000. Do I care? No, because if I'm buying a property for long-term rental income, for long-term regular passive income coming in, do I care if the home value drops? No, because I still have that $2,000 a month coming in, right? And if you buy real estate the right way, in the right areas, and the right type of real estate, especially when home prices are high right now, rents typically fall to a level where you're losing money. Now, that wasn't necessarily true in 2008 housing collapse, because what were people doing when they were buying homes in 2008? Well, what was going on was predatory lending. Okay. So you guys got to go back if you haven't, watched like The Big Short, and some of and especially anything written by Michael Lewis, who's one of my favorite authors, who wrote like Liar's Poker and The Big Short, and so many unbelievably good books out there. But he talks a lot about it. But if you look at and study '08, what was happening is there's a lot of predatory lending going on. So these banks were actually, what did it take to qualify for a loan in 2006, 2007, leading up to the collapse? What did it take for you to qualify for a loan? Well, let me see if I have a spoon around here. If you could hold up a mirror or a spoon, breathe on it, and it fogged up, you would qualify for a loan. Okay. Literally, you could walk into a bank and qualify for multiple loans. I mean, the joke was all these waitresses and all these people were buying, $500,000 homes that had no business. They were called stated income loans. There was zero down loans. There was, so many adjustable rate loans. There was the balloon loans where you would pay a very, very small amount and the thing would balloon up in 3 or 5 or 7 years. So there was all these different types of loans that they came out with. And there was zero regulation over any of it. So one of the big problems that we had in '08 was these people that were buying and financing and leveraging these homes had no business doing so. So what happened is you would end up buying these homes way overpriced with money that you didn't have. So when the market did come down and correct, these people could no longer, because of how leveraged they really were, they weren't able to keep up with it anymore. So rents did end up coming down and it created a whole thing. Typically happening though, that's not the way it works. Okay. And somebody wrote a heartbeat. Yeah. I mean, as long as they had a heartbeat, stated income, stated assets, CISA through countrywide home loans, no income, no asset loans too. Couldn't buy income on the document. Yeah. Income, stated income, no documentation, no doc loans. And then, just to kind of what happened with all that. So what the banks did at that time is the banks created these things called CMOs, these collateralized mortgage obligations, and they got in bed with investment firms, and they rated these things at AAA rated, which is the safe investment in the world, even though these CMOs, these collateralized mortgage obligations, were 99% full of these freaking terrible no doc, stated income, balloon, APR, adjustable rate loans and all that. 99% of those CMOs were full of those kinds of loans. I mean, people like Michael Burry and that were calling this stuff out and were first to see it, made billions by shorting all that. And the rest is history that we all know. But that's what was going on back then. And that's one of the reasons why we saw such a crazy. Now, this time around, home prices are very high, but it's being driven by a lot of different factors. Okay. And we're not going to get into, too into that right now. But this market is definitely a little bit different. So when we're looking at, what is the home market doing right now? Yes, it's very, very high. It's very, very hot in a lot of the country. Yes, it will probably correct and come down and cool down at some point. But are we going to see a crash like we saw in '08? I don't think so. If we do, I think we're going to have a little bit more heads up because I think it'll be tied to the overall markets. Like we'll definitely see huge stock crash first. We'll definitely see the Fed try and do a bunch of things first. We're going to see money, I think, come to real estate because it's different. And then if things are not getting better, then I think we'll start to see that cool down and slow down and the market start to come down, which I'll get into more when it starts coming to when we're looking at investments to invest in. So with that being said, what types of real estate right now make sense? Okay. So let me get my board here. Hang on one second. Let me get my board out. Let's see if this is working. My camera's still not working. I was going to draw some stuff. I don't know if this camera is going to make it work though or not. All right, can you guys see that? All right, so I want you guys to tell me, if you guys can tell me some stuff here. All right. All right. So tell me what types of real estate are available out there to invest in. Okay. You guys type in the comments, what type of real estate can you invest in? Like what different asset classes? What different types of asset classes in real estate are there? All right. So, all right. So I see. All right. So SFR stands for single family residential. Let me see. We got it. All right. So we got multifamily. We have storage units. Okay. All right. What else? Mobile home parks. Okay. All right. Apartment building. Yeah, that's very much like multifamily. Airbnb. Okay. Land. All right. I see some other answers on here that I'm going to talk about. Okay. All right. Perfect. All right. So we have single family, residential, multifamily, storage units, mobile home parks, Airbnb, land. How about commercial? So commercial buildings, strip malls, office space, things like that, right? And sorry, guys, my other camera's not working, so I'll duck down like this to talk. So notes, right? Notes are so notes aren't a type of real estate. Notes are a security instrument that secures the debt on this type of real estate. So you can buy a note on any of these types of real estate, right? A note on a single family home is it's a mortgage on all of them, right? A note is just another word for a mortgage. It tells you the terms. All right, so going back up through here. So very good, guys, very good. So I wanted to address a couple of things that people said. So first off, somebody said syndications. All right, so let me make another line. All right, so syndications are a type of investment. And what a syndication is a group of investors pull together to buy a real estate asset together, and their money pooled together is what's used for that deal. Okay. And that's very similar to what's called a private fund. So a private fund is also a group of investors' money. However, the investors in that fund aren't making the decisions and part of the actual deal. So a syndication, typically the investors will pull their money together, but they also have a lot of say in how it works. They'll have equity in the deal, and it's typically proportional and things like that. A private fund is typically going to be more on the debt side. So you're going to be collecting like interest payments, like you're offered, like in the Safari fund, which I'll talk about in a little bit. You're offered 12% interest annually for several years. So each month you're going to get an interest payment coming in. A lot of times with the syndication, you're not getting interest payments because your money's in the deal itself, and you don't start making money on it until it cashes out or until an exit strategy is done. So you can go ahead and get the money going on it. So very similar, but also very different. Now, private funds can also offer some equity on the backside, but usually it's like a point or two, depending on how much you're investing, as opposed to being proportional with the syndication. But both of those are ways for investors, for lenders, right, in the private money club, to lend money to the borrowers, the active investors, and syndication of private funds can be done for any of these. I mean, I've seen syndications and private funds done on multi-million-dollar single-family residences. So it could be done on anything, right? All the way down through mobile home parks. So Donna wrote turnkey. Absolutely. So now we're looking at different. So turnkey, I'll address that. So turnkey is simply a way to buy rental property without doing a lot of the work. So if you ever hear turnkey rentals, What that means is somebody else has already found and done the research on the property and the location. They've already negotiated the deal. They've already a lot of times purchased the deal or have it under contract. They have either a plan or have already done the work to the deal. So it's turnkey, ready to be rented out immediately. And a lot of times they even have the renter that's ready to go into the property either as soon as the work is done or right there if the work's already done. So basically you're paying somebody else to do a lot of the active real estate work that would be required to go out there and purchase rental properties. So turnkeys are great if you're willing to pay somebody else to do that work and give up some of your, your income that you would be making off of it otherwise, or your profit, so to say. All right, so let's talk about these. So single family residence. So single family simply means houses that we all typically live in, right? So a single family home is just your typical 3-2, 3-bedroom, 2-bath, 2,000 square foot house with a 2-car garage. It could be a mansion. It could be, any type of residential single family real estate with us, a single structure. And really single family even starts getting into, well, let me say it this way. Single family residence is a single home, but duplexes, which are 2 houses either side by side or on top of each other, like up in New York, triplexes, just 3 houses side by side, all in one building though, or what you call a quadplex, which is typically like one here, one here, one here, one here, all shared by one building and one roof. Those are all considered residential real estate. So it might not be single family, it's multifamily, but it's multifamily residential. When we get into multifamily, these kinds of multifamily, this is from a technical standpoint, it's considered commercial real estate at that point. So anything that's 5 units or more is considered multifamily commercial. Okay. And so that's anything like an apartment complex or, townhouses that have multiple buildings under one, multiple homes under one roof. And the way that those are managed depends on the HOA and the POA, like who's responsible for the roofs and the interior walls and things like that. We can get into condos. Condos would also fall under single family residential. Believe it or not. Okay. So that's the difference of single family residential and multifamily. Now, if we study history, single family residential, typically, like I said before, it's always going to increase in value. You're going to have your swings up and down depending on what's going on with the economy and the world and interest rates and things like that, right? I mean, one of the reasons that we're seeing such high prices right now is because interest rates are so low. So a normal person is going to not look at how much they're buying the home for. They're going to look at how much is their monthly mortgage payment and can they afford that? Because if I could buy a home at $100,000 at 15% interest from the bank, and that's all I can afford, but now with that same $1,500 monthly payment, I can now buy a $300,000 home. What does it matter to me? What matters to me is the $1,500 a month. So one of the reasons we see such high prices is because interest rates have been so low for so long now that people are able to buy higher priced homes for the same amount of money. And so it's been driving prices up also. But nonetheless, those are going to be the differences right there. So single family, from an investor standpoint, I'm going to look at what can I do with that property to make money on it. Okay. So right now, in my opinion, the real estate market is very, very, very high. At some point, we're going to see a correction. We're going to see prices sizzle out. We'll probably see prices start to come down. At least it won't be these crazy situations we see right now with competitive multiple bids on houses, right? So we're going to see that. The other thing that we're going to start seeing, I believe, are more foreclosures. So as some of these different things that have happened with COVID, some of these forbearances, as some of this stuff starts to come back, as the economy, I think, starts to correct itself, and we start to see some market corrections and everything else that's going on right now over the next couple of years, I think we're going to see a significant increase in foreclosures, which will put more properties on the market, which will give more inventory. It's all supply and demand, right? So we're going to see a correction at some point. So in my opinion, when we're looking at single family or smaller multifamily, we want to be looking for things that are quick flips. So if you're on the flipping side of the world, what are the deals that I can do in maybe 2-3 months from when I buy that home, close on it, to the rehab work that's required to getting that property resold, maybe 3 to 6 months. So if we start looking at single family, $3, $4, $5 million homes that you got to go in, you got to tear them down to the studs, you got to redo them all, make them all beautiful and high end and luxury and all that. Right, to me right now might not be the best time to do that because they take longer to get some of that high-end luxury material. I know there's a lot of supply issues and things like that right now. Prices are through the roof. So there's a lot of negatives that go along with the higher end stuff. But the quick flips are good because there's not a lot of demand on the market. It's a very hot asset class right now. So you can go in, you can get the deal done, especially if you have a solid team in place. And you can get that thing resold very, very quickly. So all we look at anytime we're an investor, either on the lender side or on the active side, how do we reduce our risk, right? So when we're evaluating these, how do we lower our risk to make this thing make sense? So look for deals that can be done quickly and can be done fast, can be done easily, and get those things moved on. Now, if the exit strategy is to rent that property out, or let's say as an Airbnb, if it's an you guys can't see that, but if it's an Airbnb or a vacation rental, or it's a long-term rental property, then let's really spend a lot of the time evaluating the area that the property's in. So if we see a downturn in the market, is that area going to stay strong? My opinion, South or anywhere in Florida, along the water, along the beaches, Florida has had an influx since COVID hit of people moving here. People that move to Florida, it's hot, right? It gets hot here. It gets hot and humid. So everybody wants to be near the coast. Everybody wants to be by the water. So if you can be on the water, near the water, have the water. That's why I don't know if you guys follow the boating industry, but the boat prices right now have like tripled and quadrupled. The boat companies are booked out like 12 to 18 months for new builds. Like it's crazy what happened with the boat market because everybody moved here. Everyone wanted to buy a boat and be on the water. So if you're looking at Airbnbs, maybe a property on the water, on the beach or near the water might make sense because if we see a downturn, where's the demand going to be? Well, the demand for things that people don't want as much will drop, but they only build so much ocean. You can only put so much real estate on the water. So if that's where everybody wants to be, to me, that makes sense to have something like that. Even in downturn economies, people still vacation, people still take trips. I think Airbnb is here to stay. I think even if we see a recession or a major downturn in the country, I think people still vacation. And a lot of times these Airbnbs, because of having a kitchen available, because the whole family can spread out, a lot of times financially, they make a lot more sense than even hotels. Especially long-term. So I think there's a lot of positives to those. And it's just a matter of finding the right ones. And, one thing you'll see a lot of HOAs doing are stopping Airbnbs. But a lot of times if you already have one, you're in a building that's grandfathered. So they might be harder and harder to have Airbnbs in certain areas. So those of you that have them will have more of a demand because there's not more coming onto the market because of new rule changes in different neighborhoods and different buildings and things like that. So to me, that makes a lot of sense as well. But again, if it's a short-term flip or a short-term deal, something that can be done very, very quickly is what I'm looking at. So in the private money club, Chris Rude, Steve Lawson, Devin Burr, some of these guys that are doing these quick flips. Like Devin is a unique situation because you'll see some of the stuff that he's doing is the Burr strategy. It's like $900,000 homes, right? But where he is and these deals that are in Scottsdale and certain areas around Phoenix, that's just what the market is. And it's similar to a lot of places in South Florida. So just because you see a high price tag on a home doesn't necessarily mean it's a high price tag for that area. So you always want to go back and look at, again, where is that property? These are all variables that go into this. So another type of real estate, storage units. I mean, storage units have been a good, in my opinion, investment for a long time. You're starting to see more and more of it right now. They're little cash boxes, really. I mean, there's not a lot of maintenance. A lot of them don't even have much electricity charges. You just put a fence around them, some security, and let people go at it. But it's a good way if you're into flipping land, which we put up here. If you're into flipping land and you're finding good deals on commercial land, storage units might be a great exit strategy. And keep in mind, if you're flipping land, when you buy the land and you go to resell it, you got to add value, but you don't necessarily have to do it yourself. So what I mean by that is if I find a piece of land right here, right, and I can buy it for $20,000, and then I want to go and remarket that land and sell it for 50,000. Well, why would somebody else pay me 50,000 when they could have bought it from that other person for 20,000 like I did? Perceived value, right? So if I don't want to actually go in and start adding storage units, or I don't want to go in and build a house or run utilities or whatever the case is for that land, what I want to do though is maybe I want to spend a few hours and do the homework. So then when I market that property, I can say, hey, this, 5 acres of land, not only could you build your dream home on it, but did you know it's zoned also for commercial use? So let me show you what a proposal would look like if you were to buy this land and put 100 storage units on it. Okay. This is how much cash flow you could create for yourself. This is how it would be done. Or maybe you spend, maybe you have a good relationship with the county or the town that it's located in, and you know somebody at the zoning office, and you go in and you get the zoning changed. Maybe it was zoned as agriculture, right? Maybe it had an agriculture zoning, and you know how to go in and get that rezoned to become residential 1 zoning, or multifamily. Maybe it's multifamily now, but it's in an area that's full of multifamily properties or commercial properties. You go and you get it rezoned from residential to multifamily, single family residential to multifamily, or residential to commercial, or vice versa. So whenever you're looking at land, storage units, what's the highest and best use of that property? And in real estate, that's very, very important. What is the highest and best use of that property? And that's what's going to bring you the most profits. That's what's going to bring you the most money. It goes right into what I was saying earlier with exit strategies. The more exit strategies that you have in your back pocket or that you can offer, the more money you're going to bring for that deal, right? So same thing when you're marketing and talking about land, and when you're going in and thinking about this. Because if somebody goes in, they're asking $50,000 for a piece of land, and people going in are saying, well, the comps are 20,000. So everybody's going and saying, I'll give you 20. I'll give you 25. I'll give you 22. I'll give you 20. It's not worth 50. I'm not paying 50. It's not. And then I go in and I say, okay, well, if it's used for residential, it's worth 20. But look, that property there is commercial. That property over there is multifamily. So what if I was able to get this lot rezoned, and now all of a sudden those are selling for 70 and 100,000? All of a sudden that 50,000 looks like a good deal. So what somebody else thought was worth 20, you understand is worth 70. So you buy it for 50, or maybe negotiate down to 40 because everybody else is offering 20. All of a sudden you have a nice little spread right there just by using your mind, using your brain, using your education, and figuring out what the best and highest use of that property is. So that's all things that you want to think about. And then we have commercial buildings. Commercial buildings, in my opinion, are a little risky right now. We see a lot of like big malls getting rezoned into like Amazon shipping centers, strip malls. They seem to come and go. I mean, they seem to get popular again, and they seem to all get empty again. I mean, I don't know what's going to happen with that. It just, to me, with COVID and everything that's been happening, I don't know, do what you want. I don't have a whole lot of experience with commercial strip malls and things like that anyways. But the other thing that I do want to talk about are mobile home parks. Okay. So in my opinion, multifamily 100 plus apartment complexes and mobile home parks are 2 of my favorite real estate opportunities right now. Okay. Now, if we see a market correction and we see foreclosures flood the market and we see home prices come down, single family residential is by far my #1 favorite, because as these foreclosures are hitting and as prices are coming down and as people are freaking out, I'm going to be buying property just like after 08. And I'm going to buy it down here. Well, if it starts here, I'm going to buy it here. I'm going to buy it here. I'm going to buy it here. I'm going to buy it here until I can't buy anymore. And then it hits the bottom. And then I'm going to sit there and let it ride on its way back up and play the cycle all over again. But So I'm waiting, but right now we're not there. Right now we're way up here with single family residential, right? So unless it's an incredible deal or I'm lending my money on a quick flip, I'm staying away from it personally. So why multifamily and why mobile home parks right now in this market that we're in? And the answer to that, in my opinion, is because people need somewhere to live. First off, do you guys know anybody that's priced out of the market? Do you guys know anybody personally that is priced out of the single family home market right now? They're looking for a home for them and their family, and they can't buy one because there's nothing affordable any longer compared to 2 years ago. Anybody see that? Or am I the only one? I have so many friends right now. Mary said her son, Angie said everywhere. I have so many friends right now that are looking for homes that cannot buy homes because everything is so overpriced and just gone through the roof right now. They can't afford it. It's too expensive, even with the low interest rates. So people are getting priced out of the market, right? So people still need a place to live. And here's the second thing. If prices are high right now and we start running into some financial trouble and foreclosures start to come on the market, well, those people that are foreclosing on their homes are not going to be able to buy another home for a while. Once you foreclose on a mortgage, it usually takes several years before you can qualify for another mortgage. But do those people still need somewhere to live? Absolutely, right? But what are rents doing in the single family home market right now? Where are rents? Are rents reasonable, or are rents also very, very high right now? Yeah, rents are going very high, rising. Everyone. Yep, absolutely. So rents are high right now, right? Rents are going up and up and up. And people are not only priced out of buying homes right now, but in a lot of cases I'm seeing people are priced out of renting homes that they want right now, or there's just nothing available. There's nothing on the market. So again, supply and demand, that's what's driving the prices up, nothing available. So if they can't buy and they can't rent what they want, they have to live somewhere. So what do you do? And that's where multifamily and mobile home parks are a very, very, very strong solution. Also, what is going on with baby boomers and people are retiring, right? If you're retiring, a lot of times you're cutting costs. I mean, we all know from our trainings, 95% of people, according to the Social Security Administration, are not going to be able to retire the way or lifestyle that they want. So if they're cutting costs, the kids are out of the house, it's them by themselves or them and their spouse. And they say in retirement, we just want to be able to enjoy ourselves, relax, go out to dinner, do what we want to do. Maybe they're not concerned about having a nice home. Maybe they don't care. Maybe they don't want a nice home anymore, all the upkeep and everything that's involved. So what's a good solution? Mobile home parks. Have you seen mobile homes these days? They're very nice, right? RVs, Mary, RVs are a good solution too, but I got to tell you, RVs are not cheap either. The RV market is through the roof right now also. And at least where I'm in Florida, the lot rent at RV parks in the summertime is like $1,100 a month. In the winter, it's like $2,000 to $2,500. So you're not really saving. And if you ever see what the price of these RVs are, they're crazy. The maintenance on them, the upkeep, that's why they call them land yachts. Just like in boating, there's always something breaking. RVs are the same way. So yeah, I mean, it could be, but a lot of times just plain old simple mobile home parks are the way to go. Maintenance free, a lot of the case, the park takes care of everything. The costs are low. There's not a lot of repairs. There's not a lot to them. They're very affordable. And then multifamily, obviously, if you have a family, a lot of times apartment complexes, things like that are a great solution for somebody with a family. A lot of times you can have multifamily apartment complexes in good school districts and things like that. So those can be a great solution. So if the economy starts to take a dip, if people start struggling financially, if the foreclosures start hitting, if prices continue to rise, these are all factors that are driving people out of your typical single family home market and into things like multifamily and mobile home parks. So if that's happening right now and we continue to see that trend happen into the foreseeable future, would you guys agree that multifamily and mobile home parks might be a pretty good asset class in real estate to be involved in right now. Do you guys agree with that? Are you guys starting to see that? So when it comes to mobile home parks, what are your options? So multifamily, we can talk about too. We have some really, really powerful investors in the private money club that deal with multifamily. So if you're looking to be involved in multifamily without actually going out there and buying 200 unit apartment complexes for millions of dollars on your own, let me know and I'll put you in touch with these investors that do multifamily properties. And these guys are really, really good. One that I want to mention is Jack Petrick, who does an incredible job, not only educating and teaching, but also offering what he offers through investing into the multifamily deals that he does and getting you involved that way. So that's a great solution. The mobile home park fund, or the mobile home parks, is another one. We have a couple strong investors in the private money club, specifically Chris Rude, Chris Naugle, and the Safari Fund. So I'll talk about that in just a second, but let me show you. Let's say you say, okay, this all makes sense. I would like to get involved with mobile home parks. So what are your options? So first off, you could go out there and you could say, all right, I'm going to find and I'm going to purchase a mobile home park. Okay, now what? A lot that goes into that, right? So you got to educate yourself first on mobile home parks, but let's just say you're educated on it. It's a lot of work and a lot of effort to go find one, but maybe you know a wholesaler. So I just saw this deal posted in the private money club last week. So I'm going to pull it up just to give you an example here. Okay, so I'm sharing my screen. So this is a mobile home park that is brought in by my buddy Nick Lamagna. If you guys don't know Nick, he's done a couple MSTV episodes. He's been in the private money club since we started it. He's an investor out of New York City and Chicago. He bounces back and forth. Nick is great, man. He has an awesome podcast called the A Game Podcast. Definitely check it out, the A Game Podcast. He's a big MMA jiu-jitsu guy, black belt, and just a really hardworking young guy that just crushes it in real estate. So Nick brought a mobile home park to the private money club. So if you're in the private money club, you can look at this stuff closer. Just go on Slack or ask me. I can send it over to you. So this property is right outside of Orlando. It's in an Orlando suburb. It's 11 units. The park was built in the 60s and 70s. It's 100% occupied. Purchase price is $645,000. The rents are $8,000 monthly, or gross income of $96,900. And then they have the breakdown of all the expenses. So everything that goes into a mobile home park, right? Taxes, insurance, maintenance, management, water, trash, electric, sewer, et cetera, et cetera, et cetera. They even break in, they even include a vacancy rate, even though it's 100% occupied. It won't always be 100% occupied. You're going to have turnover of residents. So you always want to allow for that. So you have a net operating income of 60,000 or a cap rate of 9.43. So they just kind of put it out a little bit further. If you were to buy it, finance it, what kind of money can you make? They probably even have a lender ready to go. If you wanted to finance this thing, you need $161,000 down, the loan amount, all the numbers that you need right there. So Nick does a great job of putting this stuff together. They even did 2 different videos on talking about mobile home parks, as well as the Winter Haven video specifically about this property that breaks it down even further for you. They have the site map, the survey on the park, all the information about each one of the units. And you can even click in here and see some different photos of what you are actually buying. And again, in my opinion, anything near or in the Orlando area, it's just an incredibly hot market, and it's getting stronger and stronger and stronger. So a very good area. So to do this deal, you'd want to, be an active investor. You'd want to have $160,000 down, be able to finance the rest of it, be able to manage this thing. Even with the management team, you're still the one making decisions, be handling any issues that come up, so on and so forth. Everything that's involved with active real estate investing, right? So that's one option. The other option, if you like the idea of mobile home parks, you want to be involved in that asset class, but you're more of a passive investor, that would be where you would be, this is where the Safari Fund would come into play. So the Safari Fund, for those of you that don't know, is a private fund. It's a Reg D fund, I believe, that is registered with the SEC. That is, so Chris Naugle is an owner of the fund along with a couple other partners. And what they are doing with this private fund is this fund is raising money specifically for the purpose of purchasing mobile home parks to create passive income and equity in these parks over time. Okay. So as a private lender into this passive fund, all you have to do is qualify. So you have a phone call and fill out an application. The fund manager, his name is Herson. So if anybody would like more information, what I would do is I would make an introduction to you with Herson. You would hop on the phone with Herson and you guys can talk about this. I actually talked to Herson last week and he sent me a couple documents that they put together with a ton of information about the Safari Fund and how it all works and some of the legal side and stuff like that. So I can send that over to you, make the introduction. They're also working to get, I'm putting out a little website together right now just so people can see a little bit more ahead of time. But if you want in, we already have a number of Private Money Club members that are already investing in the Safari Fund. And I was just talking to Chris Naugle this morning, and we are looking to raise some money for Safari Fund right now because Chris Rude was just able to locate and put under contract a really, really solid mobile home park in Pensacola, Florida. So we'll be using, that's what the Safari Fund is for, to raise money to buy these parks. So the Safari Fund will be financing the purchase of this new mobile home park in Pensacola that Chris Rude has been able to find and put under contract and do all the due diligence. So if you want to be involved with multifamily or mobile home parks without doing all of the work that's involved, and yes, it's a lot of time and a lot of work involved to put these deals together. But if you want to be in it without all that work, get into the private fund, put your money in with these investors and let them put your money to work for you. I'm not a partner in the Safari Fund, so I'm not going to talk about too much of the details and the terms, like things like that, but it does range from 7 to 12% of the Safari Fund, depending on how long that you're in. But again, Herson can give you all the details and you guys can talk about whether this is right for you or not. If it's not right for you, I guarantee you'll learn something new by having a conversation with Herson that'll help you in the future when you're evaluating future deals. And I also want to mention one last thing when it comes to some of these private funds, some of these, multifamily deals that you can be involved in, mobile home park deals you're involved in. This is long-term. Okay. So we talked about like the single family flips. Look for things that are 2 to 3 to 6 months. You get in, you get out, you get paid, and you move on to the next deal. When it comes to these funds and these longer term deals, and we're looking at asset classes that are going to perform well long-term, even if the market comes down, this is stuff that you're going to look at again, long-term. So think about where your money's coming from. So if it's in a qualified retirement account, like an IRA or a 401k, or the money's in a QRP, a qualified retirement plan or pension or something like that, put it into a self-directed account, no penalties, no fees, no taxes, get it into a self-directed account so you can control it. And then these might be the good types of investments to consider for retirement funds because it's long-term. You can't touch the retirement money for many, many years, typically anyways, if you're under 59 and a half years old. So why not put your money somewhere where you can forget about it for 3 years and just let it grow and grow within that account, tax-free or tax deferred. You can do it with cash, or you can do it with other money. I mean, if you put it in there, the nice thing about that is if you put $100,000 in a 12% fund, it's now going to pay you $1,000 a month on a regular basis, but you're going to pay taxes on it. But what can you do with that money? You can use it to do whatever you want, right? Buy a car or use it to pay bills or whatever. But remember, your money's going to be tied up. So, you put $500,000 into a fund that's tied up for 3 years, and then the real estate market next year drops, and you're like, well, shit, man, I see all these deals hitting the market. I wish I had my $500,000 back because I can buy these deals and make 20, 30% profits instead of the 12% annual returns I'm making in the fund. So it just depends on what your strategy is, what you're personally looking to accomplish, and what you want to do. Not everybody wants to be an active investor, even if you can make 50% returns. It's just not for you, right? So maybe it's better to have it in a long-term place. So those are the conversations that you should have with yourself. Those are the conversations to have with your spouse, your significant other, your business partner, or me. If you guys want to talk through your strategy, just schedule a call with me or shoot me an email. Let's talk through what makes sense for you. What are the pros and cons? Let's write it out. Let's figure it out, and let's get that money moving. So that's all I have for you guys today. Again, I went a little longer than I was wanting to, but thanks for sticking in there with me. Are there any questions? Does anybody have questions about anything I just went over? I do have some Q&A. All right, let me hit these questions. All right. Can you mention those private money club websites again? Yes. I'm going to put them in the chat. privatemoneyclub.com. Again, that one's not 100% ready yet, but it will be soon. And then the other one is where is it? It's moneyschooltraining.com/private-money-club. I'll put that in the chat box also. So if you could actually, if you're wanting to join, go to the moneyschooltraining.com/private-money-club. If you just want to check it out a little bit more, you can go to privatemoneyclub.com. There actually is a free membership option on privatemoneyclub.com. And I believe if you do the free membership option right now, you'll still get some different training videos that we did. If you want to check that out, go ahead and check that out. Otherwise, as soon as privatemoneyclub.com is ready, we're going to import everybody from Private Money Club into there, and then we'll open it up for everybody else to start joining. Do turnkey offers make their money on the property management? Turnkey companies make money off of the spread. So a lot of times it can be like a wholesale deal, like kind of like a wholesale deal where they make money, they put it under contract and they assign it to somebody else and they make like 5, 10, 15, 20, $50,000, whatever the assignment fee is. Turnkey rentals can be done that way. They can make money off of just buying it, closing on it, doing all the work, having a renter in there and just selling it to you where it's already being rented out. Just for more money, just kind of like a regular flip. They just did that. Sometimes they'll offer the management portion of it as well. So they'll make money off the management side. It just depends. But we do have a few really solid turnkey companies that we partnered with in the Private Money Club as well. So happy to introduce you to them also. Why hasn't Chris Rood purchased that mobile home park? Chris Rood's in the middle of purchasing a couple mobile home parks right now. The one that Nick just submitted, I have not even sent it to Chris Rood yet. I was actually planning on doing that today. So Chris Rood might buy it. I don't know. And it's not Chris Rood. It would actually be the Safari Fund would be financing it. All right. So Safari Fund is 7 to 12% annually. Yes, Liz, that's correct. It's 7 to 12% depending on the terms. So how long? And Herson can fill you in on all the details on that. All right, David, I'm talking to you next Monday, it looks like. All right, awesome. If you need anything before next Monday, David, just send me an email. My calendar's just been a little backed up the last couple of weeks. So Catherine said mine's from the SD IRA. I can't touch it for 3 years anyhow, so I'll get 40,000. Yes, exactly, Catherine. If it's in a retirement account, that's a great way to look at it. Like I can't touch the money anyways. Put it somewhere where I can set it and forget it, right? Put it into a fund. I know it's safe for 3 years. I'm earning money during those 3 years. And when the money comes back, I'll deal with it then. So that's a great way to look at it. A bunch of people saying they're in the Safari Fund. So glad I invested in the Safari Fund. Jack Petrick is a class act, 100%. RVs are beautiful, but very expensive. Yes. All right. Looks like I hit everything. All right. Awesome, guys. So thanks so much for being here. I appreciate it. If you need anything, like always, just reach out. I'm here for you and hope you guys all have an awesome week. See you soon.